Well, welcome everybody. Good morning to you all. It's great to see you all in this absolutely beautiful venue. This is the Economist Conference, Investing in Change, How Crete is Being Transformed. It's the Economist's first major event organised here on Crete, but we're sure it's not going to be the last. We're organising this today in partnership with powergame.gr, who are we're very welcome to have as a partner. I'm joined on stage by Joan Hoey, who is my co-chair. I'm Alasdair Ross, the country's editor at The Economist, The World Ahead. So it's great to be here with you all. Joan, we have an extraordinarily busy day. A lot of people, a lot of themes to get through, but why don't you get us warmed up with your views on the outlook for, say something simple, the world and Greece.
Well, thanks very much. Good morning, ladies and gentlemen. Delighted to be here, delighted to be in Crete in this historic venue. We're going to have a great day. We've got a great lineup of speakers, of course, starting with His Excellency the President. In a nutshell then, the world. The war in the Middle East, the conflict in the Middle East is obviously shaping our global baseline forecast. That's the Economist Intelligence Unit, who I represent. We're forecasting that world growth will slow this year from 2.8% in 2025 to 2.3% in 2026, with risks tilted sharply to the downside for growth and upside for inflation. Our central scenario assumes that dated Brent blend prices, international oil prices, will remain elevated in 2026 above $100 US, and that any durable relief in terms of oil prices will require a sustained reopening of the Strait of Hormuz, which doesn't look imminent, even if it looks like we're edging closer towards a ceasefire deal. But the signing even of that deal is going to take some months, and the reopening of the strait will take longer. And obviously the shock extends beyond oil and gas market. Oil markets, gas markets have tightened, shipping and insurance costs have risen. So it's a very uncertain international outlook. As for Europe, Europe's facing a pretty lackluster growth outlook in 2026 in the context of still very uncertain US trade policy and obviously the risks that are stemming from the Middle East. And it's obviously oil and gas prices, they are the main transmission mechanism by which the conflict in Iran is going to affect growth and inflation and the economic outlook in general in Europe. We also see that concerns about oil and gas prices are creating problems in bond markets with rising bond yields, and that market volatility will carry on as long as the conflict continues. So we're now expecting aggregate growth in Europe, real GDP growth of 1.5% in 2026. Previously, before the war, it was 1.6%, so not that much better at all. Higher inflation, we're already seeing that's probably going to peak in the second quarter, in this quarter, and then that is going to put renewed pressure on private consumption, investment, and so on more broadly. Now, Greece isn't immune, of course, to the negative fallout from the conflict in the Middle East. It will take a hit to growth. We now forecast real GDP growth for Greece of 2%, which is actually higher than many other forecasters. I think others have it about 1.8%. We're sticking with 2% growth for Greece for now. Before the war started, we were forecasting 2.2% growth, so well above the Eurozone average, again, for Greece. I think Greece is in a strong position to weather this storm, to manage and mitigate the risks. And One of the primary reasons for that is because of the very large fiscal surpluses that Greece has been running in recent years. That means that it can have targeted and temporary help for businesses and households. We also see that Greek bond yields are not rising as fast as others. Greece has a very robust and quality tourism sector, which could be a beneficiary of the turn away from Asia and the Middle East in 2026. And we're expecting another stellar year for Greek tourism. And certainly as a Brit, I can see that all the Brits want to go to Greece this year. Many of my family are currently in Greece on holiday or going to be there or here next month. Greece has been attracting very large inflows of foreign investment in recent years. You know, there's a big upturn there, and that's in the face of high global uncertainty. And we expect that to continue. So all in all, I would say that Greece is going to continue performing above the Eurozone average in 2026 and in the medium term, which is our forecast.
Okay, great.
I mean, we're here in Crete, and we should say something about Crete. So maybe, Alasdair, you can talk a little bit about the island.
One of the striking things about what you say is, and this has been true for a few years, how Greece is a sort of bright spot in this bleak global scenario that we lay out. Constantly we come back to Greece, and Greece looks relatively good in comparison. I think it's really timely that we've got the spotlight today on Crete, because even within the Greek context, things on Crete look really, really interesting. It's an interesting moment for Crete, I think, a moment in the sun, if I can use that phrase. Tourism is booming here. Tourism is doing very, very well. Infrastructure is attracting a lot of investment. We'll be talking about that, obviously, over the course of the day. A really important area of economic activity here. And we shouldn't ignore Crete's geopolitical status. You know, it's virtually a permanent aircraft carrier out here in the eastern Mediterranean with the Suda Bay base. Tremendously important, given the shaking that's going on around the world in the geopolitical sphere and in the Middle East. But, you know, this tourism success and the successes that we're seeing in Crete, sadly, are the cause of their own challenges. You know, having shiploads and plane loads of Brits and others coming into Crete to enjoy themselves and the beautiful facilities and the beautiful geography here is a strain on resources that are already quite stretched. You know, driving in from the airport, you can see the urgency of upgrading some of the infrastructure here. You've got the Castelli airport on the way, but not here yet. You've got the roads being dug up and rebuilt, but not ready yet. So there's an awful lot of work still to be done here on Crete, and I'm really pleased that we're going to be looking at that in a great deal of detail today, with not just His Excellency, but also we've got the Prime Minister coming later on, we've got ministers, and we've got leaders of the sectors, the industries who are taking charge of that investment push. So I think we should probably just get started and let the experts talk for a while.
Absolutely.
Thank you. Thanks very much, Joan.